In the year 64 AD, the Roman denarius was 95% pure silver. You could hold that coin in your hand and know you were holding real money. Actual precious metal intrinsic value. But the Roman Empire was expensive to run. Endless wars on the frontiers, a massive military, a sprawling bureaucracy, free grain for the citizens of Rome, gladiatorial games to keep the masses entertained. All of this required money the empire didn't have, so Emperor Nero made a decision that seemed brilliant at the time. He reduced the silver content of the denarius from 95% to 93%, just a small change. Nobody would notice. The empire could mint more coins from the same amount of silver. Problem solved. Except it wasn't solved. It was just delayed. Every emperor after Nero faced the same problem. We need more money. We can't raise taxes without causing revolts. We can't cut spending without weakening the empire. So they debased the currency, again and again. By 250 AD, the denarius was 50% silver. By 270 AD, it was 5%. By 300 AD, it was basically copper with a silver wash. And something strange happened. Something that modern economists would recognize. Prices exploded. Food became unaffordable. Soldiers demanded higher pay because their wages were worthless. But the economy wasn't growing. Trade was collapsing. Cities were shrinking. The empire was stagnating. High inflation and economic stagnation at the same time. The Romans didn't have a word for it, but we do. Stagflation, and it destroyed the empire. 2,000 years later, we're doing the exact same thing. The US dollar in 1971 was backed by gold. Since then, it's been backed by nothing except government promises. And the money supply has expanded over 2,000%. We're debasing the currency just like Rome did, and the consequences are starting to appear. Rising prices, slowing growth. The early stages of stagflation. In the next 10 minutes, I'm going to show you why currency debasement always leads to stagflation. How Rome's experience 2,000 years ago mirrors what's happening today, and why this pattern is one of the most reliable indicators of imperial decline. Because empires that debase their currency are empires that have run out of options, and stagflation is the price they pay. Let's start with what currency debasement actually is, because the mechanism is important. In ancient times, coins were made of precious metals, gold, silver, bronze. The value of the coin came from the metal itself. If you had a silver coin, you had silver. You could melt it down, trade it, use it. The metal was the money. Governments issued coins as a convenience. Stamped coins were easier to use than raw metal, but the value came from the metal content, not the stamp. Currency debasement is when the government reduces the metal content while keeping the face value the same. You take a coin that's supposed to be 1 ounce of silver. You make it half an ounce of silver and half an ounce of copper, but you still call it 1 ounce of silver. You've debased the currency. From the government's perspective, this is magical. You can now make twice as many coins from the same amount of silver. You've doubled your money supply. You can pay soldiers, fund wars, build monuments, all without raising taxes. The costs are hidden. At first, nobody notices. The coins look the same, they spend the same, but eventually people realize the coins have less silver. Merchants realize the coins are worth less, so they raise prices. A loaf of bread that costs 1 coin now costs 2 coins. Not because bread got more valuable, but because the coins got less valuable. This is inflation. More coins chasing the same amount of bread. Prices rise. And here's where stagflation enters. When you debase the currency, you create inflation. But you don't create growth. The economy isn't actually growing. You're not producing more goods. You're not more productive. You're just creating more money. So you get rising prices without rising prosperity. Inflation without growth. Add in the economic disruption that inflation causes, the uncertainty, the misallocation of resources, the breakdown of trade, and growth actually slows or stops. You get stagnation. Inflation plus stagnation equals stagflation. This is the pattern, and Rome followed it perfectly. Let's trace Rome's currency debasement and its consequences because the timeline is instructive. From 64 AD to 215 AD, the denarius was gradually debased from 95% silver to 50%. Inflation began appearing, prices rose. But the economy was still functioning. Trade continued. The empire was still strong. Then from 215 AD to 275 AD, the debasement accelerated. 50% silver to 5%. Inflation exploded. Prices increased by over 1,000% in some areas. The economy broke down, long-distance trade collapsed. Cities shrank. People reverted to barter because coins were unreliable. This was stagflation. The empire couldn't grow. Productivity declined, but prices soared. Emperor Diocletian in 301 AD tried to solve this with price controls. He issued an edict fixing maximum prices for over 1,000 goods and services. It failed completely. Price controls never work. They create shortages. Goods disappeared from markets. The black market flourished. The economy remained broken. What actually happened was the economy fragmented. Different regions used different currencies. Some used gold, some used goods, some used foreign coins. The unified Roman economy dissolved, and with it the empire's ability to function. By the time the Western Empire fell in for 76 AD, the currency was worthless. The economy was gone. Debasement had destroyed it. Not immediately, not in 1 year, but over 200 years. The cumulative effect was total collapse. Now let's look at the mechanism of how debasement causes stagflation, because understanding the process is critical. When a government debases currency, it's essentially creating money out of nothing. This creates inflation. More money chasing the same goods equals higher prices. But inflation itself is economically destructive. First, it creates uncertainty. Businesses don't know what prices will be next month or next year. This makes long-term planning impossible. Investment declines, growth slows. Second, it redistributes wealth. People who hold cash or receive fixed incomes lose purchasing power. People who own hard assets or control prices benefit. This creates social tension and economic inefficiency. Third, it distorts economic signals. Prices are supposed to convey information about scarcity and value. Inflation distorts this. Resources get misallocated, bad investments happen, productivity declines. Fourth, it destroys savings. If inflation is 10% per year, savings lose value rapidly. People stop saving, capital formation declines. Without savings, there's no investment. Without investment, there's no growth. Fifth, it triggers defensive behavior. Workers demand higher wages to keep up with inflation. Businesses raise prices to cover higher costs. This creates a wage price spiral. Inflation feeds on itself. Breaking it requires severe measures. High unemployment, recession. The cure is painful. All of these effects combine to create stagflation. Inflation from money creation, stagnation from the economic disruption inflation causes. You can't have sustained currency debasement without eventually getting stagflation. The only question is how long it takes. Let's jump to the modern era because we're following the exact same pattern. In 1971, President Nixon closed the gold window. The dollar was no longer convertible to gold. For the first time in history, the world's reserve currency was pure fiat, backed by nothing. And what happened? The money supply exploded. In 1971, M2 money supply was about $600 billion. Today it's over $21 trillion. That's a 35-fold increase. The dollar has been debased not by reducing metal content, but by increasing supply. Same result, more dollars, each dollar worth less. And we've had inflation. The dollar has lost about 87% of its purchasing power since 1971. What cost $1 in 1971 costs over $7 today. This is currency debasement in action. But here's where it gets interesting. For decades, we had inflation, but we also had growth. GDP grew, standards of living rose. It seemed like we'd figured out how to debase currency without suffering the consequences Rome faced. Why? Because the US was still productive. Technology was improving, globalization was expanding, productivity gains offset the inflationary effects of monetary expansion, but those conditions are changing. Productivity growth is slowing, globalization is reversing, easy gains are exhausted, and the money creation has accelerated. From 2008 to 2024, the Federal Reserve created over $5 trillion through quantitative easing. During COVID, trillions more were created. The debasement has reached Roman levels in relative terms, and now the consequences are appearing. Inflation surged in 2021 and 2022. Growth is slowing. We're seeing the early stages of stagflation. High prices, weak growth. The pattern Rome experienced is beginning to repeat. Let's talk about why governments always choose debasement even though it leads to disaster. Because the pattern is so consistent across history, there must be underlying reasons. First, debasement is politically easy. Raising taxes is unpopular. You face immediate backlash. Cutting spending is unpopular. Every program has defenders, but debasing currency is invisible to most people. They don't understand monetary policy. They don't see the money creation. By the time they notice prices rising, the government has already spent the money. The costs are delayed and diffused. The benefits are immediate and concentrated. Second, debasement solves short-term problems at the expense of long-term stability. An emperor facing a barbarian invasion needs money now. A president facing a recession needs stimulus now. They can't wait. Debasement provides immediate resources. The inflation comes later, maybe on someone else's watch. Third, empires in decline have no other options. They've already raised taxes to the limit. They've already cut what they can cut. Debt is maxed out. Revenue is declining. Expenses are rising. Debasement is the only way to keep the machine running. It's a desperation move. But empires in decline are desperate. Rome in the 3rd century was desperate. Britain in the 1970s was desperate. The US today is arguably desperate. 34 trillion in debt. $1 trillion annual deficits. An economy that can't grow fast enough to service obligations. Monetary expansion is the only tool left. And it leads inevitably to stagflation. Now let's talk about the endgame, because currency debasement doesn't go on forever. Eventually, one of three things happens. First, the currency collapses. People stop accepting it. They switch to gold, foreign currencies, barter, anything else. This happened to the Roman denarius. By 300 AD, people didn't want it. Trade moved to gold or goods. The currency died. Second, the currency is replaced. The government admits failure and issues a new currency. This happened in Weimar Germany. After hyperinflation destroyed the mark, they issued the Rentenmark, a new currency backed by real assets. The old currency became worthless. Third, extreme measures are taken to restore currency value. Paul Volcker in the 1980s raised interest rates to 20%. This caused a brutal recession, but it broke inflation. The dollar survived. The cost was high, but the currency was saved. Which path will the dollar take? We don't know yet. We're in the middle of the story, but the pattern suggests we're closer to the end than the beginning. The debasement has been going on for over 50 years. The consequences are accelerating. Inflation is elevated. Growth is slowing. Debt is exploding. The tools to fix it are limited. If the Fed raises rates enough to control inflation, the debt becomes unserviceable. The government can't afford the interest payments. The system breaks. If they don't raise rates enough, inflation persists. Stagflation becomes entrenched. They're trapped. Just like Rome was trapped in the 3rd century. Just like Britain was trapped in the 1970s. Currency debasement creates a trap, and escaping requires pain. The question is whether the pain comes as controlled reform or uncontrolled collapse. Let's talk about what this means for individuals, because understanding the pattern helps you prepare. If stagflation is coming, traditional strategies fail. Stocks don't perform well in stagflation. The economy is weak. Corporate profits decline. Real estate struggles. Unemployment is high. Demand for housing falls. Bonds are destroyed by inflation. Cash loses value. There's no safe haven in stagflation. Historically, the assets that hold value are real goods, commodities, gold, things with intrinsic value. Because when currency is unreliable, people flee to tangible assets. This is what Romans did. As the denarius became worthless, wealth moved to land, gold, and physical goods. The wealthy survived. Those who held coins were wiped out. The pattern repeats. In Weimar Germany, people who held marks lost everything. People who owned real estate or gold survived. In the 1970s, gold went from $35 an ounce to over $800. Commodities soared. Stocks and bonds struggled. The lesson is clear. When currency is being debased, move out of paper assets and into real assets. But timing is difficult. Moving too early means missing gains. Moving too late means getting trapped. The signal to watch is the government's response to inflation. If they prioritize growth over price stability. If they keep monetary policy loose despite rising prices, debasement is accelerating. Stagflation is coming. Act accordingly. If they tighten aggressively, accepting recession to fight inflation, they're trying to save the currency. The Volcker path. Painful but potentially effective. This is the pattern from denarius to dollar. Currency debasement leads to inflation. Inflation combined with economic disruption leads to stagflation. Stagflation leads to economic and political collapse. Rome followed this path over 200 years. Modern empires can follow it faster because money moves faster. But the destination is the same. The dollar has been debased for 50 years. The consequences were delayed by productivity and growth. But growth is slowing. Productivity is declining. The buffer is gone. And now the debasement is showing its effects. Rising prices, slowing growth. The early stages of stagflation. We're not where Rome was in 300 AD, not yet, but we're on the same path. The question is whether we take the exit before reaching the destination. Whether we choose the pain of monetary discipline or the catastrophe of currency collapse. History suggests empires rarely choose wisely. They debase until they can't. They inflate until the currency dies. Then they start over. This is the empire economy, where we decode the patterns that repeat as empires rise and fall. Currency debasement is one of the most reliable patterns. From Rome's denarius to America's dollar, the mechanics are identical, the consequences are predictable, and the end is always stagflation and decline. If you want to see these patterns as they unfold, subscribe, because understanding what's coming is the only defense against it. The empire is debasing the currency. Stagflation is the inevitable result, and we're watching it happen in real time.